Welcome back. Welcome to my new series as well, everybody. We are putting $7,000 into the stock market. Wish me luck, first of all. I'm doing this in my Roth account. We're maxing out the Roth for the year 2023. I don't know exactly how much I'll be putting in each stock yet. I'm going to be divvying it up. But we are going to be contributing about $7,000. There's already some money in there as well. So you can max contribute $6,500. And I've already put some in, and I have some from last year that I did not invest yet that I use for dollar cost averaging. We're going to be buying some more stock. So starting off strong, we're using ticker ABR for today's video, a stock that I've been looking to buy into for a while. I do already own some of this one. My Roth IRA is really messy. I don't know if you guys are Roth investing fans. If you're not, I suggest you get into a Roth IRA. They are phenomenal, but again, that's not financial advice. My Roth is interesting. There's some dividend stocks. There's some high yielding dividend stocks. There's some common stock. I have Amazon and Tesla in there. But I'm trying to reallocate some of those funds to just strictly be investing in dividends to track how they do over time. Dividend investing is one of my passions. I think it's a great way to invest for young investors, for old investors, for income investors. It's endless, really, all the people that could benefit from some dividend stocks. I, of course, love high yield dividend stocks, and they are higher risk because of that. But you take the risk with the reward, and you see how it goes, and that's what we're going to do. So ABR, Arbor Realty Trust, it is a REIT. It is a pretty popular REIT. It's got an interesting history. Their dividend history is pretty solid, but unfortunately their recent history has not been so solid. A number of issues pushing this stock down. It has been all over the place. We can see they're down 6% the past year, which doesn't sound that bad, but they were at a low of 10 and a high of 1760. So they've been moving all over the place. Their 5-year chart is pretty nice, up 11%, and their max chart ugly, down 35% all time. But since the 2008 crash, they've done phenomenally well from the low-ish area up 1,200%. You can't really beat that. But we're just talking about the more recent history, the last 5 years, especially seeing how they've been doing and what has been happening with this company. We're going to go over 3 important things for this stock. We're going to look at their dividend history. We're going to look at some of the information from their investor report that is on ABR's website. And we're going to talk about the short reports that have been dropping this thing down and the companies putting them out to see if they are actually valid criticisms of the company or if it's a short seller cash grab. So I hope you guys enjoyed the video. Let me know. Don't forget to like and subscribe if you do. And we'll just go ahead and jump straight into it. So we did look at their history a little bit. There have been some bounces all over the place. More recently in 2023, they hit a low of $10.70, jumping back up to almost $18 and are now back down because of another short seller report, which we are going to talk about. But first, let's take a look at their dividend history. All right, ABR's dividend history is interesting. Now, it is a REIT, so it did struggle a lot when the real estate market crashed. Looking at the 10-year, we can see that they grew the dividend from 12 cents a quarter all the way up to the current 43 cents, which is really, really impressive. Their dividend yield is really high, especially right now because of the short reports. But looking at their max, we can see that they were paying out a lot regularly in the 2006, 2007, 2008 until that crash happened, and then it dropped all the way to 8 cents after a period of 3 years with no dividends at all, and have since grown 8 cents to 43 cents. Pretty phenomenal. They average 2 to 3 cents of growth per year, which is good. They have a pretty good dividend growth history rate, which I do like to see, and being able to track all the way back, plus that special dividend, is really helpful in looking at the value of this stock's dividend and if it will continue to pay out, which I believe it will as long as the real estate market stays consistent. Now, jumping into their dividend scorecard, we can see the forward operating yield, 12.6%, pretty phenomenal. $1.72 annual payout is their forward operating yield, which is impressive. That's per share, and you're currently paying only $13 per share. Payout ratio says 95%. We're going to look at the actual ABR report that talks about that, and they have it considerably lower. The 95 would actually scare me a little bit, but their 5-year growth rate of 11.38%, which is phenomenal for the dividend growth, and you have 10 years of that dividend growth. So very good record, pays out quarterly, consistent, higher risk, but higher reward. That's why I'm looking at this for the Roth account, because I do want to be a little more aggressive, because I do have more time in the market, because I'm a little bit younger than the average Roth IRA investor. If you guys want to know more about Roth IRA investing, let me know. This has been a super fun series to do some research on, and I'm very interested in seeing what happens. So what we're going to do now is we're going to move over to ABR's report for their investors. So let's go check that out. All right, so their investment presentation is Very, very informative. I suggest you guys go check it out. I'll link it in the video description down below. If you guys are interested, we'll just go over some of the quick points. If you're a numbers nerd like I am, it's fun to read through this stuff, especially if you're going to be investing or thinking about investing into one of these companies, especially for a Roth account where you're going to be holding it for a long time. Definitely learn to read these presentations, find some of the holes. Sometimes I've read some that are really bad, but ABRs has not been bad whatsoever. We'll talk about some of their recent highlights. That's 62 cents per share, which is 20 cents in excess of the current dividend, representing a payout ratio of 68%. Very, very different from the 95% listed on Seeking Alpha. Much better. Anything below 70, I would call safe. Above 70, you get into risky areas. And then when you get above 90, that's when I stop investing. I think I might have a few, but those are small amounts. 11 straight years of dividend growth with the lowest payout ratio in the industry. Annualized dividend of $1.70. Pretty phenomenal. Really good metrics here. 40% dividend growth in the last 13 quarters. They did do that repurchase of 37 million of their stock. 17% discount. We love those stock buybacks. You love to see it. And then they have more information, balance sheets, all this kind of stuff. There is one other thing I want to look at. Two other things I want to look at on here. We can see quite a bit of how they put their money. So their total portfolio overview is $13.6 billion. Now the market cap is 2.5-ish billion. So they do have a really nice total portfolio, large amount. I really like this spread where their bridge loans, when they do a lot of bridge loans, and the asset classes, they have multifamily. In my opinion, multifamily is much, much better, especially in times when interest rates are higher. You can perform pretty well, especially depending on how they get these loans. And we can see exactly where their locations are. Texas, so they're pretty diversified. Florida, Georgia, North Carolina. So a lot of the East Coast. I believe most of their offices are in Alabama. But I like that the other is such a large category. They're not stuck in just one state. They have a lot of flexibility. And the fact that this isn't just one, you can assume that the rest of them are lower than 7%. So it is pretty diversified. Like I said, if you're a numbers nerd, go through, look at this report. They give a lot of good information, CAGR, everything that you would really want to look for is going to be on here. So we can see that they generated levered returns of over 17%. And then we talk about the single family rental platforms, which produced $1.2 billion in 2022. They're doing well with the single family as well. A lot of money coming in. Servicing portfolio, $2.8 billion. Escrow balances currently earning $227 million in annual cash flow. So pretty phenomenal spreadsheet in my opinion for how they've been doing. The growth has been really nice. I'm really interested in seeing how they continue. Again, this is a little bit higher risk. And then we can go over and look at all of their earnings, net revenues, quite a bit of movement here. I love seeing the revenue increases, 460, 580, 670. Really impressive. And so we're actually already looking at quarter ended of March 3. So this is the first quarter they've already made almost 200,000, which is great. 5-year return annualized 18%. Beautiful. Not a lot of complaints here. Let's go ahead and look at the downside, look at the short reports, and let's see exactly if these are considerable when we're talking about buying ABR and if this is something that's going to be a reoccurring problem, because they have had 2 in the last year or 2. Then their short reports are scary. So let's take a look. All right, so the first short report is from March 17 of this year, and the stock tanked. If we go to the 1 year, we can see March 17, that's when this article was written, but so the stock, it started tanking from $15. It went all the way down 32.25%, which is horrible. Now, Seeking Alpha did put this report out. There's a lot of comments on it, and basically it was an unknown short selling outlet called, I don't even know, Ninji, I think is how they pronounced it. Research, it was a scam. In my opinion, fully a scam. It was a short seller report to make someone a bunch of money, and then they tanked and sold everything and made a lot of money on it. I'm getting all these emails all of a sudden. So very important to note that one was not backed by a lot. They had a bunch of bogus sayings, bogus information about the company, and just all in all, it was hard to read. One of the things with these short reports is you can tell when they're written and translated in different languages, because grammar's off, spelling's off, they're awful. So that was the first one. That was in 2023. We saw a huge drop, and their more recent one is from Viceroy Research. Now, arguably a better company, better institution, I don't know what you want to call it, slightly. It's a real one from what I can tell, but they have a lot of issues themselves. So there wasn't a lot of information given, not a lot of sourced information given. They kind of just threw out blanket statements, and in the end, the stock dropped considerably. I mean, 25% again. Actually, no, it was just here. I think it actually, when did they put this one out? It was recent. November 16. So the stock wasn't a downtrend. The market was in a downtrend, but it did fall another 13%. It then jumped 15% and it's fallen 5%. So it is moving all over the place. But this report had a lot less weight to it than the last one. So last one we saw 33% dip. This time 13. But we were in a little bit of a downtrend before, so that could just be some soft selling, people that are a little bit nervous and drop out. Now, looking at Viceroy Research, they've been slapped with a number of fraud lawsuits in the U.S. MPW, which is this, they call it MPT, Medical Properties Trust. I don't know why they're calling it MPT, not MPW. Who knows? It's just an acronym. They sued them for their defamation when they released a bunch of information about MPT, MPW, and that REIT. And they claim that it was literally just a short report for them to make a bunch of money for someone that was shorting the stock. And it's very possible. They say that the overall Viceroy that's what they do. They put out this information and they short stocks and they make someone a lot of money, maybe themselves, but maybe they're paid to do it. Who knows? Either way, it is usually scammy, not something that I would do, and extremely high risk. Now, we did see it did not do as well as the last report, which is funny because it has a little bit more merit in my opinion. But still, it is a little bit scary with ABR because we're seeing a lot of these reports coming out and it's just not good. You don't want a company that you're relying on your dividend income for to be moving all around, to be high volatility. But that being said, I really do like how the company responds to the backlash. And I do think it's a discount. If you look at the last 5 years, we're not trading too low, but when you get into the 10s and 12s, this thing constantly is moving back up to the 17s, all the way to the 20s in 2021. So it does have a bit of a floor, and you can even see that we're kind of in the 2022 low. And so in my opinion, it's not a terrible spot to start buying. I'm going to be watching this one closely, but again, that's not financial advice. I want to know what you guys think about this stock. Would you put ABR in your Roth IRA? This new Roth IRA series, I'm really going to be contributing a lot of money into my Roth account. I want some better results this year, and I want to continue to grow that while I still can. For those of you that don't know the rules with the Roths, you want to put as much money in you can while you can, because as soon as your income reaches a certain threshold, you are no longer allowed to invest in a Roth account. And that's just taxes. So they did up the amount. You can invest $6,500 in a Roth account this year. We'll see if that continues. You can also do $7,000 if you're above the age, I believe, 45 or 50, one of those. But I'm going to be continuing this series on. We're going to be talking about a number of different stocks I'm going to be putting in, and I'll do a little bit of a breakdown just like this, talk about why I like them. So ABR, the key things that why I like them: it is high reward, it is a high dividend yield, consistent dividend history. Even in times when they've dropped their dividend, they bounce back and they continue to grow it. So there are some other stocks that I'm considering. MPW is destroyed recently, and I think over time they could do well, but there's some really high risk with that one. I'm not going to do a full video on MPW, but I may talk about it in passing in some other videos. I'm going to do some more REITs. We're going to do some BDCs. We're going to talk about what has made me the most money so far in my account, what is beaten down, what could make me some more money in the future, and so on and so forth. Now, if you guys are a fan of the 1K Dividend Account Challenge, you may have noticed I have not been posting the monthly updates. There is a reason why. The account is basically dead. It's not out of money. All my money is still in there. But what happened was I had multiple accounts with TD Ameritrade. And so they were, I don't know if they're bought out by Charles Schwab, which is what I use for the 1K dividend account. So I will be making a new account with, I think, Vanguard, and we will be putting 1K into that to the start of 2024 for the 1K dividend account. But the results from the 2023 account are pretty much dead because it combined all of these stocks. Now, I did own a number of these dividend stocks in the TD Ameritrade account, and it doesn't separate them out. So now it's showing just the overall account. Overall, the market is down. The account was down 10%, roughly 10% from what I could tell. But all the information that's been merged with when I bought the other stocks. So that's a bit of a bummer. But in 2024, I doubt that's going to happen again. I don't think we're going to have any acquisitions, and I'll be more careful. I did not see that coming, and I did not expect it to combine all my accounts into one. So that was definitely a negative. But I will be starting that series soon. We'll put out a video probably this week talking about the stocks that are going to be going in there. And we're going to start buying them pretty soon because we have... we want to get those January dividends. We're going to start a little bit earlier this year. So expect those videos to come if you're interested. Hit the like and subscribe button. You guys have been phenomenal. I've been putting out videos consistently for about a year now, and we've been growing greatly, and I can't appreciate you guys enough. Helps me out quite a bit, and it's also so fun, and I love hearing your guys' opinion on everything. So this video definitely is a little bit of a longer one, but I just want to say thank you for all you guys have done, and I'm excited for 2024. I'm excited for the dividend account. Comment below what you think I should put in the 1K dividend account, because I have no idea. I'm not going to overlap. I'm not going to put any of the same stocks again, probably. But overall, just a very interesting account to watch. So we'll be more consistent with those ones, and I'll be tracking everything. We have a bunch of new content coming out. So before I just continue to babble on, if you guys don't mind liking, subscribing, drop a comment. Let me know if there's anything I can improve. And I hope you guys have happy holidays, and I will see you in the next one.